This
job.
conference will now be recorded.
So there are 15 generally accepted accounting principles that I expect you to know. First of all, the business as a single entity, typically as a corporation. When you create a business, that's separate from you. So you don't mix your personal things with your business stuff. And so one of the things with the president is saying, well, he mixes his personal and business stuff together to, reduce his taxes. So you're not supposed to do that. Currency. Everything has to be in US dollars. So if you're a US company, you got an operation in China, you got one in Liberia, you got to convert all of those dollars to US dollars so they're uniform. You can't use uh, Chinese dollars in a statement that you're preparing, a consolidated statement. So, got to use one currency, the US currency. Time period, typically, we do everything on a year's basis. Then historical cost. If you bought some land at 100,000, even if it's worth 2 million, it's got to stay on the books at 100,000. So that was one of the big issues and big problems companies had. They were just, they would write stuff up and make it look like they were doing well, and they weren't. So you have to keep stuff at historical cost, what you paid for it, not what it's worth. Full disclosure. You have to disclose everything, whether it's, happened during the year or not. So this year, companies, when they do their financial statements for 2020, have to disclose if the virus is going to impact their business in any way. They got to disclose that. So people know, people have to be aware. Like when BP and that big oil spill, it had to disclose in its financial statements, for the prior year, that they might have to reimburse for that. Recognition principle. We talked about this in journal entry 15. The recognition principle states that companies reveal their income and recognize it and expenses in the period in which they happen. Okay, so we're not on a cash basis. The going concern concept, we have to make sure that the business is a going concern, because if it's not a going concern, even what you paid for, you gotta list the values at liquidation value. So we have to make sure it's a going concern. The matching principle, we have to match expenses with revenue. So if we have a situation where revenues are generated at $400,000 in December, and workers are going to be paid in January $75,000, but they've already done the work, then we have to make an adjusting entry so that the revenues reflect all the expenses, or the expenses are matched with the revenues. You got to pay 400 on this, pay tax on this 400,000. So it's going to be good to have all related expenses with it. Materiality, large companies, a lot of times they're going to ignore things under 1,000, errors that are under 1,000 or 10,000. It's too much to correct everything. Conservative accounting, we want to always be conservative. We don't want to ever be guesstimating stuff. Sometimes we have special rules for industries such as the oil and gas, banking, and insurance. So they have some special rules in terms of how they account for their transaction, their revenues and expenses consistently. You got to do it the same way all the time. So it's just like you got to wear a mask all the time when you're on campus. You can't just decide when you're going to wear it. Same thing with consistency. You can't just change how you're doing stuff. You got to do it the same thing. You want objective information. So you need some, you don't just estimate Accrual basis accounting, we should be using the accrual method, which is that same thing. We recognize revenues when the earning process is substantially completed. We don't wait for the cash to come in. And then there's another one. We still have to assess cash flow prospects. This is this chart of accounts. As we move forward, as you begin to work on your financial statements and your next study problem, your income statement needs to look like this. Sales all the way down to net income, taxes. So, it starts to look like this. Statement of retained earnings stays the same, but the balance sheet looks like this. Year one and year two. You already have done year one, and you're supposed to have turned that in. You'll be doing year two on that JHJ study problem. And so all the year ones should look alike. All the year twos won't, because different people will have different journal entries that they'll be working on. And you got some multiple choice questions here that I would practice on if I were you. Get those answered, so you'll be ready for the quiz on this. Okay. We have been working on the accounting cycle. And in the accounting cycle, we did step one, in our last transaction, we made journal entries. We did steps 3 and 4, we posted to the ledger, we prepared the trial balance. Then we jumped to 7 and 8, we prepared the financial statements and closed the accounts. Because sometimes adjusting entries cause problems. So I go through these prior to midterm, then I come back to 5 and 6 after midterm. And so we want to begin to look at adjusting entries now. In the primer, at the end of the adjusting entries chapter, you'll find a 40 journal entry problem. You will find a 40 journal entry problem. So what you think is going to be required for that 40 journal entry problem, if you had a guess? Team is responsible for journal entries 1 through 10. You'll be presenting those next time, these adjusting entries. Team 2 has 11 through 20. You'll be presenting those next time too. Good format. Turn it in ahead of time, and everybody's got to present me a journal entry. Who's getting credit? Everybody learns how to do one adjusting entry. Then team 3 comes in with 30. Then team 4, with that special 40 person, does 31 through maybe 42. I guess there were a couple of extra ones there. So they go 31 to 42. They present on Tuesday. Okay.
Okay, so team 4 have 12.
Yeah, I guess so.
Okay.
Since y'all so blessed.
Okay.
To whom much is given, much is expected,
Professor Boyd, what pages are those in the primer again?
I think these start on 71. This starts on 71, and those journal entries are something like, let's see what page they're probably on. They probably start on something like 85, 84, I think. So what are adjusting entries? These are entries that we make at the end of the period so that the revenues and expenses on the income statement are correct and the assets and liabilities on the balance sheet are correct. Let's see if we can see why that happens. See if we can get the rationale for adjusting entry. You may recall we had a demonstration problem where you purchase supplies for cash for $1,000, and then you purchase supplies on account for $8,000. So you purchased $9,000 worth of supplies. Okay. Now you could track these supplies daily, but most times you're just gonna wait till the end of the period, month, or end of the year, and you're gonna say, okay, I had 9,000. Let me take an inventory. I take the inventory that's $3,000 in supplies. So what's happened? I have used supplies. So I no longer have 9,000 in supplies. I don't want to look at that example yet. So what I have to do is to make an adjusting entry where I debit supplies, expense and credit supplies for 6,000. Let me just go through here and wipe all of this out right quick. Okay, so when I bought the supplies, I had 1,000 here because I post that. Then I had 8,000. Okay, but when I count my supplies, take an inventory, it's only 3,000. So I had what, 9. So if you had 9,000 in the bank at the start of the period and 3,000 at the end, what does that mean in terms of your expenditures? If you deposited 9,000 and you only got 3,000, what does that mean for your expenditures? You probably spent $6,000. And so here, supplies are listed at 9, but we only got 3. So we make this adjusting entry, debiting supplies expense and crediting supplies for 6,000. And then we post it. So we post the 6,000 here. So this is the HAE, because we no longer have 9,000. And then we're going to come down here and do the debit. And that's going to be 6,000. It doesn't want to come out for some reason. And that's just in there because eventually you would close this account out. So let's look at what's happened. We had a preceding entry where we bought supplies, paid cash, we bought some on account. Those are preceding entries. But because we've utilized 6,000 in supplies, we got to make an adjusting entry, debiting supplies and crediting supplies, debiting supplies expense and crediting supplies. And so therefore, the accounts are now the way they need to be. Supplies expense was understated by 6,000. And supplies were overstated by 9 until the adjusting entry was made. So notice we have asset, we have a balance sheet account supplies, and we have a income statement account expenses that are involved. Cash is never involved in the AJE, in the adjusting entry. For the second time, cash is never involved in the adjusting entry. And for the third time, cash is never involved in the adjusting entry. It can be involved in the preceding entry, but it's not in the adjusting entry. So we have 4 types of adjusting entries. Prepaid expenses, we'll work on that today. Then unearned revenues, accrued revenues, and accrued expenses, we'll work on those on Thursday after the presentations. Okay. Important rules for adjusting interest. When recording adjusting interest, remember 2 very important rules. First, cash is never involved. Second, adjusting interest always involve either a revenue or an expense account and a balance sheet account. Okay, so you want to keep those rules in mind. So we got 4 types: prepaid expenses, unearned revenues, accrued expenses. In the prepaid, in the deferral situation, the cash has already been involved in the transaction. In the accrual, the cash comes later. Most assets, once we get past accounts receivable, are prepaid expenses. They're debited to an asset account when acquired. So there's a prior entry debiting the asset and crediting cash. But these expenses expire with the passage of time or usage. So before we can prepare those financial statements, assets are overstated, expenses are understated. And so we make an adjustment entry to correct the situation. So supplies, prepaid insurance, autos, equipment, all of those items are prepaid expenses, which when utilized must be transferred to the income statement. So you don't buy something unless it's going to generate cash, because it's going to show up there as an expense. So supplies, insurance, autos, billings, and equipment. So let's look at the example again. Supplies such as paper and pens result in an increase or debit to the asset account. Rather than record them as an expense when utilized daily, we just put them in the asset account. So assume we purchased 5,000. We would have debited supplies for 5,000, credited cash for 5,000. And inventory reveals only 2,000 in supplies on hand at the end of the period. Okay, so we don't have 5,000 anymore. So what adjusting entry are we going to make? Observant classroom, observant class today. What's the adjusting entry going to be?
$3,000
What accounts?
in credit.
What you going to debit? We're going to debit supplies, expense, and credit supplies. We're going to debit supplies, expense, and credit supplies. So we have 5,000 in the account. We make the adjustment to get the balance of 2,000. So this adjustment is always the difference between what we have available and what's left. Are there any questions on this adjusting entry? Any questions?
So you debited supplies and credited the adjusted amount?
When we bought the supplies, we debited the supplies and credited cash. When we used the supplies, we debited supplies expense and credited supplies because it's no longer an asset. So when we first buy it, it's an asset. It's like you buying steaks from the grocery store. When you buy them and put them in the refrigerator, they're an asset. But when you grill them and eat them, they become an expense. You no longer have them. So as long as they are in the refrigerator, fresh, they're an asset, okay? But once you use them, they become an expense. So that's all we're saying. Any questions? So preceding entry, did we have cash? Yes. Adjusting entry, is it cash? No. Is there a revenue expense account? Yes. Is there a balance sheet account? Yes. So these are entries. So hopefully you're kind of seeing why I didn't muddy these into the water as we were learning the first basic journal entries. Let's look at insurance. Everybody here has a car? Good. Got insurance? Does everyone have insurance on their cars? I hope so.
Yeah.
And you know that when you buy insurance, you pay for it in advance. So if we're running a business, we need protection from losses due to fire, theft, etc., etc. And so let's assume a company on April 1st bought a 12-month insurance policy for $24,000. So it's buying a 12-month insurance policy on April 1st for $24,000. When December 31st rolls around, how much of a refund could the company get? So we bought the insurance, we debited the prepaid insurance and credited cash. But when December 31st comes around, we say, okay, we got to count out how many months from April to December 31st. How many months have expired?
Is it 8?
Might be one more.
9?
Got to count April. And our insurance is expiring at the rate of $2,000 a month. So we're simply going to multiply 9 times 2,000 and get 18,000. So we had 24,000 in the account. We're going to make the AJE crediting prepaid insurance and debit insurance expense for 18,000. We no longer have 24,000 in insurance. We only have 6 at the end of the year. The other 18 then becomes an expense. So it's an asset when it's first bought, but then it moves over to the expense side. Are there any questions? It's a smart class today. Okay, let's move on to long-term asset. Autos.
Is this a brand new PowerPoint?
Said what?
Is this a brand new PowerPoint?
Yeah, it's these are page 76 and so 70 or so in the primer.
Oh, I don't have the primer.
Well, get it then. How you supposed to be an A student without the primer? See that? Why you messing up? Okay, so let's assume that we buy an auto costing $30,000. We pay $3,000 down, and the auto is going to have a full year life. What's journal entry to buy this auto? Give me the journal entry. Do I have any C students today?
7.
So what's this journal entry going to be?
Transaction 7. So it's going. How much is it?
Cost 30,000. We
So
paid 3,000 down. What's this journal entry going to be?
it's auto, which is number 210, which is gonna be
210.
debited. Ain't that the number? 210 auto?
30,000. Oh, the count 210. Okay.
Yeah,
30,000.
yeah, it's gonna be debited.
We're going to credit cash for what?
The $3,000 is up there.
Right. That's what we paid down.
Yeah.
And the
then
note
you
payable comes 27,000. So that's the purchase of the auto. So you see, you have to know these journal entries because they're coming back into play. Now, when you drive a car off the lot, what happens? Appreciates in value. So we bought a $30,000 car, and our assumption is that that car is going to depreciate over a 4-year period. So we divide 4 into 30,000, and so we're going to write off $7,500 per year. Okay. Does everyone see how we got $7,500?
I don't.
We divided 30,000 by 4 years. Okay.
Okay.
So the car costs 30. It's going to have a 4-year life. So we write it off over 4 years. 30,000 divided by 4 is 7,500. Thank you, Cheryl, for helping the class
But
out.
if you paid the 3, you wouldn't take that away. Like you still
No,
gonna put the $3,000 on it, even though you paid it.
The car costs 30,000.
I understand that.
And so if you bought a $30,000 car, you paid 3,000 down. I don't care what you paid down. You could have paid 30,000 down. When you drive it off that lot, it's going down in value.
Okay.
And the 30 is going down. So you can forget about what you paid. It's that 30 that's important. Okay. So the asset's gonna, depreciate at a rate of $7,500 a year for 4 years. Now, we always want to know what the car cost us. So our adjusting interest, debit depreciation expense, and credit accumulate depreciation. So this is the expense that we're recording in terms of the car going down in value. But we always want to show the car at 30,000. So it's less the accumulated depreciation where we keep track of the decline in value, get this net book value. So we could have subtracted the 7,500 from the 30, but we would not know what the car costs. That is, if we just had the 22.5, we wouldn't know what the car costs. We always want to know what assets cost. And so therefore we keep that up, and then we just put this in a what's called a contra asset account that is going to have a credit balance. And it is when you do the balance sheet, you debit auto less accumulated depreciation, net book value 22,500. Any questions? So we have auto with a credit balance of 30,000. We have accumulated depreciation with a credit, auto, excuse me, has a debit balance of 30. Accumulated depreciation has a credit balance of 7,500. And your depreciation expense is 7,500. Any questions? Any comments? Everybody can do these.
I can try.
You can try. Okay.
It's gonna take some practice.
Go take some practice. Why?
Because that's how I get practice.
Let's go to our adjusting journal entry study problem. So we'll help team one out a little bit since they're up first. It says J.J. Roncar in 2017 purchased supplies on account costing $25,000. At the end of the year, supplies total $5,000. What team are you on, Huntsberry?
I'm on team 2. Yeah, group 2.
Okay. Chatterer, are you still there? Is Chatterer there? Well, I'm going down to Latanya. Hi, Latanya, I've given the screen to you. So we'll take a break for about, you got 2 minutes for the first journal entry and 2 minutes for the second journal entry. So we're going to take 5 minutes and then Latanya will lead us in a discussion of what these journal entries should look like. So
What
5
happened
minutes.
again?
So what?
What you said now?
You got the remote.
I do?
Yeah,
I don't think I do.
you got to accept it.
I don't even see it. What's it?
Because
Oh, it
Latanya
says
Williams has remote control.
no, it said you now. I just seen.
Tanya Williams has remote control. So
Can I
Cynthia,
get that page number, Professor?
said what?
Can I get that page number that we're on right now?
Page number that we're on right now, 85.
Thank you.
Mm-hmm. I'm going to give you 5 minutes to get this done.
It's saying active to make me put it.
Okay, Latanya, you ready?
Yeah, I guess I am. Okay. So for supplies is $25,000.
I think it was. And don't worry about it being accounts. Don't worry about it being cash versus accounts payable. Don't worry about that.
Okay. Then for the supplies expense is $5,000. Okay. For the adjusted, on down. Down. Okay, so for the adjusted, it'll be the supplies will be $25,000 debit.
Mm-hmm. And it said the balance in the account is $5,000. So where the balance is, put 5,000. So go down there to the balance and put 5,000.
Like right here.
Well, yeah, that's fine.
Okay.
So what's that going to tell you about the AJE?
It's gonna be credit.
So what?
It's gonna be credit on the credit side, right? And
How
it's
much
gonna
is it
be
going to be?
Isn't it 20,000 credited?
That's correct.
Oh.
Go down one line. Your debit supplies expense 20,000.
Okay. Okay. I had it different, but I see now why. Then for the supplies expense, that's what I was confused at.
Now you unconfused, right?
No.
But you only do this
Okay,
if you
so
work.
should it be $20,000 right there?
Correct.
Okay.
Now go back up to your journal entry and correct it. Your adjusting journal entry, your
So it should be
AJ.
20 right here. It
Yeah.
should be 20. Should be 20.
Yeah, put the 20s there. So you get the understanding when you work it. That's why I have you all work the problems. If you watch me work them, you won't necessarily pick that up.
Right.
Can everybody do this now? Is there anybody who can't do it?
I think I might need to do one more problem. Like I think I slowly got it. I just put them under the wrong, um, like under the wrong thing. Cause I had put, well, I guess 20,000 for both of them. Okay, cause I had put them on there wrong.
So you always subtract the balance from the debit or the credit, and that's gonna give you the AJE.
You check the ending balance, whatever is in the account, and that's going to give you the AJE.
No, that's what I'm saying. So to get it, we just subtract the balance from whatever side the like the money's on, the credit or the
Yeah,
debit side.
yeah. You're on the debit side. You had 25. You only got 5 now. So the
Yeah.
difference goes on the credit side.
Well, it ever be flipped like it's 5 here and then like it's 25 for credit and or no, it's always gonna be the debit with the balance.
Just depends on what the numbers are.
Okay.
But it's always going to be that you take that balance, whatever it said is,
Mm-hmm.
and you put it right here. Then you see what's in the account and you go from there.
Okay. I get it.
So
Yeah.
that's the key. Take the balance and put it right here. Then you know the balance cannot be in the AJE unless it's the same thing. But the balance can't be in the AJE. Any
Yeah,
question?
I read it wrong. That was the problem.
Are you ready now, Latanya?
Yeah, no, I read the problem wrong. That's why I put the 5,000. I was thinking it was saying that something different. That's why I didn't put the 20,000. I put the 5,000. I thought that they had 20,000 left over. I didn't read it correctly. That's on this.
Oh, okay. But you're not gonna blame me for writing it wrong, are you?
I'm not gonna blame you. I wouldn't have turned it in though. I would have kept looking at it before I turned it in.
Well, you ready for one more as we help team one out? Y'all
I'm
ready
ready.
for one more? You
Yeah,
ready to redeem yourself?
I mean, we can see what we can do.
You ready to redeem yourself, Latanya?
Sure, why not?
Good. Let's go to the second one. And what this problem is saying is that in 2018, they purchased supplies paying cash in the amount of 15,000 and purchased an additional 20,000 on account. And it says record the interest to purchase the supplies. Also record the adjusting entry required at the end of the year if supplies on hand total 10,000. Your adjusting entry should reflect the fact that the beginning supplies were $5,000. Did you read all of that, Latanya?
I'm reading.
So everybody read all of that. Take 5 minutes and make your journal entries. So you got more than one journal entry now. So read all of that, take 5 minutes, and then we'll be ready to roll on to it again. So that first one is a C student problem. This is an A student problem here.
Well, let me let an A student take the problem then.
Okay, we're about ready. And so as we work with this problem, the 2018 policy, we just, so the accounts don't change. So what do you know about this expense account when we get to 2018?
It has an additional 20,000 in supplies on accounts.
Well, before we get there would have been a closing entry of 20,000. So the expense account would have been closed out, okay, going into 2018. But this 5,000 balance in the supplies carries over to 2018. So that's what I'm trying to get you to see. First of all, the expense
Okay, so
account is closed out.
So we'll still have $5,000 to use for supplies.
That's correct. You still got 5,000 in your bank account from the prior year. So you purchased 15 and 20.
So it's a total of 35,000.
Okay, so we're gonna put 15,000 in here.
Mm-hmm.
Then we're gonna put 20,000 in here. And so the first thing to help you out, you just go, okay, what's the balance in the account now?
5,000.
No, I mean at the end of the period.
Oh.
We started with 5,
Mm-hmm.
but it
15.
tells us what?
Get out.
$10,000 is gonna be in
10,000.
there.
So it's
Okay.
15,000 total.
So we need 10,000 here. So what AJE are we going to make for 2018 so that the balance in the account is $10,000?
What was the question again?
What is the AJE going to be in 2018? We did a simple one in 2017, and it was 25 in there, 5 at the end, so 20 became the supplies expense, and then we closed it out. That's 2017. Now we're in 2018.
Can you scroll up a bit? I can't see
Is
the
it 20? Is
top
it
part of supplies.
25,000?
You want us here?
Like up, not down, up.
But you want to
Yeah,
see
yeah.
up?
This right here, the supplies part, the 2018 supplies part. I didn't see that.
Will it be the 20? Will it
In
be
the
That
problem, it
25,000?
says right here, you purchased 15 and 20.
I know, but I rather see it in the chart.
I just didn't make the journal entry. So there'd be how much did we purchase for cash?
15.
15,000.
Um,
So this next year you'd have 15. You'd have 15 again. Then you'd have another entry debiting what?
on account.
Supplies again,
Mhm.
and crediting what? Accounts payable.
Yep. It's
How
20,000.
much is that? 20,000.
Yes. It's 20,000.
So the question is, what's the AJE amount going to be? So we take this out. What's going to be in that journal entry for 2018?
Is it 25,000? Um, 35. And you got a balance of 20,000.
Okay, let me add a line.
Wouldn't it be
Yeah.
15,000 and 25? 25.
Isn't it 25,000?
Okay, so how much do we have in the account now?
5,000.
5, 15, and 20. How much is that?
That's 5.
Oh,
5,
Oh,
15, and
it's
20.
40. 40.
never mind.
You got 40,000 in the account.
It's
How
30.
much is supposed to be in the account?
10.
So what's the AJE gonna be?
30.
We need 30 here.
Yeah, I didn't know you were supposed to add them two balances together.
Yep. Okay, so we go from the simple, just a couple of things to, okay, we're going to the next year now. And so the AJE is going to be the 30,000. And then we're going to put 30,000 in here again with our closing entries. Because remember, closing entries come after adjusting entries. And this account will be 0 again for the expense account. So that expense account is going year by year. 2017, this is the expense, close it out. 2018, this is the expense, close it out. It goes year by year, does its job, it's closed out. Any questions?
Can we go over that one more time?
Okay. Let's go over it one more time. Okay. So we came into 2018 with 5,000 in supplies already from 2017. Do you understand that?
Yes.
Okay, I got that.
sales. So this is 2017. Okay. Now as we come into 2018, we already got 5,000 in our bank account. So the problem says we purchased paying cash 15,000 in 2018 and on account 20,000. So another 15 and 20,000. We did the cash. We bought 15,000 for cash in supply. So we're gonna put that here. We're gonna post that. So supplies now has 15 more. So at this point, supplies has 5 and 15 are 20. But then we buy what? 20,000 on account. So now supplies has another 20. So our sub, our debits on this side now so the total debits at this time is now $40,000. Okay. But we're told that the balance in the account is supposed to be what?
20,000.
No.
10,000.
10,000?
Yep. It
The
says the
50,000.
balance in
What's
the
the
account is 10,000. So therefore, if you got 40 in the account and 10 is supposed to be in there, what must the AJE be?
30,000. The 10 from the 40.
Right, 30,000. So in working the problem, you need to go through and set it up however works best for you in terms of what information you want in there. So you can see I kind of changed it a little bit. So this has to be the AJE. And so, and then we're gonna close this out at 30,000. So we would make a closing entry to do that. So to keep it going, let's go on to 2019. So we're ready to go to 2019 now. And let's assume that there's a cash purchase of $5,000. So in 2019, we had a cash purchase of $5,000. And the ending balance was $12,000. So one purchase ending balance of $12,000. Can you now move on to 2019? So can you give me the AJE for 2019? With this information. And you know, this is how a company operates. This is how your bank account operates. You don't stop it. It just keeps going every year. So if you had this information and you had your prior information, what is the AJE going to be for 2019? Don't everybody speak at once, but take 3 minutes. We'll do it at 4 o'clock.
Is it 7,000?
Is it 7,000? The balance coming into the year was 10, and we purchased an additional 5, correct?
Yes.
Is it
So
3,000?
we got 15,000, and the balance in the account is what?
12.
12,000.
Well,
So what must the AJE be?
It should be 3,000, right? 15? No, 28.
I didn't tell you to change nothing, Huntsberry.
I
no,
ain't
it should
saying
be
anything.
3.
Don't
It's
gotta
3,000.
be 12.
It's 3,000.
I said
I said,
$3,000.
I was about to say it's 3,000.
Oh,
I didn't add the 15,000.
so in 2019 it would be 3,000.
okay. Can you
Oh, see,
tell
I
me
got
why
it.
it's 3?
So what? I say you had it. Why did you change your mind,
No,
Huntsberry?
Okay,
we
cause
added the 5,000. Well, the 10,000 plus the 5,000. Then that gave us 15,000. Then you subtract the 15
The balance
from the 12, and then that gave you 3,000.
Oh, I
No,
know
I
it.
honestly get why it's $3,000, but what is that 5 doing at the top like that?
The 5 here.
Yes.
Because that's what we added. That's the additional, like that's the
That's the
additional.
amount he gave us.
You added the 10 and the 5 to get the 15. Okay, I get it. Never mind.
I got it now.
Oh, you got it now?
Mhm. I told you just need a little practice now.
So these are adjusting entries, and hopefully you see why I skipped them now. With people having some problems with the regular entries, I just wanted to concentrate on the regular entries and going through the cycle. So the adjusting entries, it takes, this kind of logical reasoning of what's going on, as you see here, and how do we come up with the entries and everything. So it just, it's kind of something that throws you off kilter a little bit. So I just wanted to say, okay, I've just learned to work with this after, the midterm and after gone through 7 and 8 with regular journal entries and closing entries. So we come back to this. So at 1:30 tomorrow, we will review the A exam. If anybody who wants to look at that, we will review the review problem for the other students, that review problem that you turn in, see where you have any issues. We'll review that on tomorrow also, so that you'll be ready for your exam when it comes to that. So you got extra time to get ready. And, we need to look at these adjusting entries for team 1 and 2. If they have any issues or questions, they can come in also as we try to get those ready. So,
Professor, are you able to record that tomorrow? I have work tomorrow, so I won't be able to get on the call. But I just want to be able to double check my work.
okay,